Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So as always, folks, we're going to dive right into the charts here today and take a look. Don't forget, today is another big earnings day. We have AMD and SMCI after the bell. This morning, we got Caterpillar. We'll take a look at Palantir earnings as well as, again, a lot of earnings making waves in the markets today. All right, let's dive right into the S&P 500 chart here. And what we can see is the S&P futures are essentially trading slightly higher on the day. If we look at where we closed yesterday on the stock market, it was right here. And you can notice that, again, we are up about almost 10 points on the S&P. So we'll be opening about 10 points higher. And again, that's not a big gap up, but it's a continuation of what we saw yesterday. Now, yesterday was an amazing day. I want to show this to you guys because if we go to the S&P chart itself, look at how dead the market was yesterday. It's almost as if late last week and all the craziness that we saw, it's almost as if it didn't even happen, or the markets just were so exhausted by it, they had to take a breather. Now, we did open higher yesterday. We had this beautiful gap up. We had about 2 candles up, 1, 2, and then look at this. The rest of the day, the market stayed in an unbelievable tight range. This tells me a lot of algorithms were controlling it. There was a buy-side bias from retail investors, but there was really no major institutional involvement. When you get institutions buying or selling, you get bigger swings in the market. When it's very tight like this for the entire day, except for the first 2 candles, what does that tell us? It tells us that we are getting essentially algorithms trading back and forth, and then the slight upside bias is generally from retail investors. And again, very important to kind of take note of that, in my humble opinion. All right, so that's where we are on the day so far, looking at a small gap higher. Taking a look at the daily chart on the S&P, we did get a beautiful bounce back in the markets, but notice we did not fill the gap. All right, now gaps are formed when a market closes, or a stock, or really not crypto, because crypto never closes, but you get basically a close here. This was Thursday's close, and you opened it down here on Friday. That created a gap in the charts. Now, again, in general, the philosophy I go by is gaps are meant to be filled, but once they're filled, they tend to be significant resistance points. All right, so what does that mean here? Well, if we flip back to the charts, gap fill would occur at this level here at approximately 63.39. All right, and again, that's going to be the level to watch today. How does the market react off 63.39? Now, what's fascinating about that is that on the gap up today, we're going to be up 10 points. And if we look at yesterday's close, I don't know if you can see this up here, we closed at 63.29. So again, a gap up today, it should fill the gap. And the big test will be, can the markets push through this by the end of the day, or do they get rejected? And again, that's going to be the first big test after the big drop from last Thursday's high to Friday's close. That'll be the first test for bulls and bears, the first face-off, if you will. All right, now looking at the bigger time frame, let's keep in mind we still are into that impressive parallel here, taking this beautiful low from October of 2023 to the April 7th low. And that, again, to me, is the line in the sand of the big play, meaning that if we get through gap fill here, right here, that would be your next upside major resistance. You can see how the market reacted. As soon as it touched that line, heavy sell-off followed by heavy sell-off. Can we rally through gap fill and push back up into that level? All right, we'll quickly touch base on the NASDAQ 100 here. The NASDAQ 100 did not fill the gap as well, but it is up this morning, looking like it will open just above the gap fill. So same thing here. Let's keep an eye on how the market reacts in that front. And again, just a reminder, guys, we have that bigger parallel on the NASDAQ composite that I've talked about here. We take a look and we go back to the COVID lows, very similar to what I showed you on the S&P, but this parallel goes even further back. And again, you can see the COVID low here on March 2020 to the low here in January of 2023, which was the bear market low on the NASDAQ. all the way up to this high here in the bull market of 2021. We tagged it here. Look at what happened. When we tagged it in December of 2024, we pulled back, consolidated, and then we had the massive sell-off. And look at where we are again. We're kind of jumping around that higher trend line with a pretty nasty weekly engulfing reversal candle as well. Now, again, watch to see what happens right around here, just like the S&P will be watching to see. The dollar today is up fractionally on the day. Not much going on here. Again, the parallel will be my support resistance line. You can see again, the low here to the high here gave us this perfect high on the dollar recently. It's since pulled back. We don't know yet if it's consolidating in a bear flag because you don't have enough candles. In general, before I really start to speculate on bear flags or in spirit of bear flags, I want at least 3 candles sideways, right? Sideways, maybe slight angle up to 45 degrees. We only have 2 inside bars here. So it's a little early to say, oh, we're starting to form a bear flag. But again, let's watch and see. If we do form a bearish flag, and by the way, notice where the low on the dollar was. It was right at this pivot area here. So you can see how former resistance where we got rejected here, then when we went up and broke out, that becomes support. But again, the question is off of this reversal candle here, this big nasty red candle that basically negated the previous 2 days, what are we forming here? And that will give us insights into the most probable outcome of where the next move on the dollar is in the short term. Remember, I'm just talking short term here. So literally days to weeks out, not months to years. Months to years, I unfortunately don't have a lot of faith in the dollar in terms of the longer term. But again, shorter term, it's all about the short term daily chart. The 10-year yield getting its first bounce here after 2 days of downside action. Notice where that bounce is coming in. I love to show this to you guys because it's just so cool. But look, the low yesterday and today, right at this pivot point right here, right into that line. And there's your little bit of a bounce. And it just shows like, for me, this isn't tradable, even though I did say yesterday it could trade back up here, but it's just not a big enough move to get me excited as a swing trader. But again, it shows you again, the fall and the breakdown goes to the first pivot low and then catches a little bit of a bid. It's almost like it's predestined. And I think that's so amazing about the charts is that, we always talk about how the markets are, on their own, they do what they want. Yes, they do. But for some reason, these levels just have a way of working where they give at least short-term bounces off of them. And by the way, that's exactly why, as a day trader, I can do what I do. And even as a swing trader, because you get to a point where you start to put factors together, and then you can ultimately say, okay, my odds of a bounce here are, let's say 75% or 70 or 80%. And you can start to say, okay, well, if I know those are my odds, then if I do this trade 3 times on 3 different charts or 4 times, let's say 4, I should win 3 times. And that's very powerful, starting to kind of differentiate yourself from emotional attachment to just being a regimented robot when it comes to trading. And that's really what we all have to strive to be. I know it sounds kind of weird to be a robot, but when it comes to trading and investing, the best investors are very robotic. They're very disciplined. They don't deviate from their stated goals of looking for technical factors. And that's again important versus, a lot of retail and even some institutions, they get very emotional during panic periods or absolute greed periods. And then they get themselves on the wrong side just before a big market reversal. All right, HIM's reported earnings. This stock is getting trounced about 12% to the downside this morning. This will be one that we are watching in the live day trading room for trading. Kind of a weird chart because you had a pivot high and then this kind of area and then this kind of area here. Notice you did get a short-term topping tail here a couple days ago. That was most likely formed by institutions realizing or understanding that the numbers might not be so good, and they unloaded into that. That also occurred last Thursday when that market reversed. So the market reversed, also helping push it down. But sure enough, the topping tail bearish reversal signal. Notice the high of the topping tail is the closest point or the highest point even back above these highs. If a topping tail forms and it's down here, it would not be an absolute topping tail. And I see a lot of you guys commenting like, oh, there's a bottoming tail there or a topping tail there. You have to know the criteria. For a topping tail to have power, it must be at the highest point in recent history. So again, if you zoom out on the chart, you literally would go back to February before you had a higher point. So all of these candles in between, this is your highest point. Therefore, this candle would hold weight as a topping tail versus other ones out there. All right. And that's really, really important to understand. There's other criteria as well that I teach in the Winning Trader series. Okay. So downside move on HIMS today. Your first major level of support would probably be right around this 53 level. See this high pivot area? I actually think it's a little bit lower right in this vicinity. So right around 52.25. Notice high pivot. High pivot, it opened above but closed below. And then we can see right here, touch the high, touch the high. That's telling me there's a level for a potential support and bounce on HIMS at that level there. Now, if it goes through that level, which any level can be broken, remember, it's all based on probability, your next big level will be right through here at around 46.80 to 90. So basically a pierce of 47. So support 1, support 2, those will be my key levels. You can even combine this into a range, but again, it's a pretty wide range on this volatile stock. Palantir is having a tremendous move this morning. Well, listen, it's not a crazy move. It's not up as much as Meta was up on earnings, but again, it's still having a very good move, trading up a little, about $10 higher here in the pre-market. They did have good numbers. I still have issue with the fundamentals of this. Now, listen, the growth was awesome, but I kind of think everyone already expected that, right? On the other side, the one issue is they had their first billion-dollar revenue quarter. Okay, that's great. Congratulations. My only issue is the company is now going to be trading at almost a $400 billion valuation. If you, let's say, $1 million each quarter, right? And they didn't do $1 million in the last quarter because this is the first $1 million quarter. But let's just say they do $4 billion in revenue for the year. That means that this company is trading at 100 multiple to revenue, not to earnings, to revenue. That's very lofty. I remember past companies that did this here. And if we flip over here, we can take a look. I remember SE. SE was one that back in 2021, I just was like totally, it was so ridiculous. It went like this. And then look at the drop. Now, I'm not saying Palantir is going to see a drop like this, but is it due for a pullback? And the answer is yes. And if we go back to Palantir here, and again, that was like the chart I just showed was basically the last time I remember a company that was trading at 100 times revenue versus earnings. Earnings is still pricey at earnings, but revenue is even crazier. But if we look at this, right, what do we see here? We can see that, again, you're trading in the upper ranges. And so the question is, well, where are we going to find resistance on Palantir? And I was doing some analysis on this, just trying to kind of figure it out. And let me see here if I can find that same sort of pivot here. If we go right up into this level, so you can see kind of a pivot point there, and we bring it up into this area. Yep, there you go. So you can see right and through here, you have this low, and then it kind of goes through here, and then it breaks briefly. This was the April 7th kind of panic sell, and then it reestablishes. And this is something I look for. See how you closed back above, and then it tried to break again right there, and it couldn't. It hammered and hammered, and then went up, and then hit it again, and then kind of continued on its merry way. And then you take the parallel here, and this will be a level right around 172 to 173 today is where I will look to short. The other thing to keep in mind here, guys, is what has been a general theme of this earnings season is that when you see these big gap ups, they tend to fade. And so I'm expecting that with Palantir to look for the fade on Palantir. Obviously, I'd look for that 172 to 173. It's actually trading at 172.08 right now, but I'd like to see one little push up, and then I think we get some sort of pullback, at least as a day trade, maybe a $5 pullback or so intraday on Palantir. And I'll keep my eyes on that for a trade during the live day trading room today. All right, Caterpillar reported earnings, initially saw a big flush, then rebounded. Now it's down a little bit. Daily chart was extremely overbought. I actually like this as a swing trade short. You can see the trend line, pivot high, brief pierce, and then reversal, pivot high, and then look at what we just hit. So the stock, again, will be opening lower today. Not a trade here because as a day trade, I look for big moves, and we just don't have a big move on Caterpillar in the pre-market. Again, it closed yesterday at 433.70. It's trading right now at 428.35. So again, $5 on a $400 stock, that doesn't get me excited. Now, here's one. Here's Pfizer. Pfizer did have earnings this morning. They actually beat on revenue by almost $1 billion and beat on earnings by 20 cents. Really good numbers. But again, this group of stocks, the drug stocks, have been out of favor as the president kind of has been hammering on, drug pricing and tariffs and all this stuff for the drug companies. So again, overall, as a swing, I like it. It pays a 7.5% dividend. But really, what we need to see on a bigger kind of picture, we need to see a breakout of this down sloping parallel. So it's going to be opening higher today, but I want to see over the next few days, can it try to make it up and break out above this 26.75.70 area. AMD reports earnings after the bell. The stock is trading up in general with the other semiconductors today. And again, one thing I'll be watching is, do we rally up into resistance here at 187? Probably not intraday, but this would be a level in the after hours when they report earnings. 187 would be first major resistance. There's a secondary gap fill just above that at 190.61 right here, and then a subsequent gap here. Just based on how volatile these moves have been. Remember, think about what Microsoft and Meta did initially on earnings. Now, listen, some companies just dump out if they miss, but we always want to go in as a trader, and this is really important. As a swing trader or a day trader, always assume the crazy move, because what you do then is you might miss the trade, of course, but at least you're protecting yourself by kind of looking for that bigger move and then trading it at that point if it does happen. So it might only be, let's say, 1 in 10 chance that it pops up to the 207 area, which is that level that I just talked about on the charts here, this upper level here. But if it does, that would be a slam dunk shortable opportunity on AMD. And so again, yes, could we miss it? Let's say it goes up in here and then dumps out. Sure, you could. But again, you have to make that determination for yourself. Are you going to be super disciplined and not want to get into crazy positions? Or do you want to kind of be on a different point where, you only take the best of the best setups where your probability of success is, let's say, 80-90%. And it's really up to all of us, right? I mean, there's nothing wrong with giving it a shot. It also, a lot has to do with position size. Position size isn't something I go into in the game plan quite often. But really, if you went into earnings and you did a couple shares short on AMD, okay. I mean, if it goes $10 against you, you lose $50, let's say. But again, to do an all in and just pray and hope, that's a different story. Again, that's something that's more problematic, that brings on a lot more risk. All right, Nvidia, real quick, guys. Nvidia is actually falling down here a little bit. It's still net positive, but interesting to see this thing rolling over. This again was a big reversal with follow through. So this retrace was a big retrace yesterday. Let's watch and see what happens to Nvidia up in this range, because again, it is getting close to some key breaks. One trend line I'm watching like a hawk, and this will be the trend line of all trend lines because it's Nvidia and it's almost a $4.5 trillion company. This trend line going back to the April 7th lows, watch when this breaks. When this breaks at around 173 to 174, this would be the beginning of a break of the uptrend. And that could be a bigger catalyst to downside. As long as we remain up here, you would assume resistance would be the high at 183.30 from the gap up on Thursday. But aside from that, we're just now waiting to see when this trend line breaks there. Let's take a quick look at Bitcoin. Bitcoin, again, we did see the bounce the last couple days. I have all my annotations here on the charts. But again, very clearly, we hit the support, got a bounce. We could go as high as a retest of the scene of the crime, or maybe we don't. We don't know yet. We're going to watch. But basically, if you break 11,800, I think you're going to 108,000. Again, your topping tail was your bearish signal with your bear flag off of it. All right. Next up, let's take a look quickly at gold. Gold having a pause day today, not much going on there. Again, could see a little bit more upside to about the 3,400 to 3,410 level, but that will be significant resistance. As long as you remain below the wedge pattern here, the bias has to be selling into resistance versus a breakout, which would go higher. Now, if it breaks this area, then the bias flips, the probabilities flip, and all of a sudden you say, okay, well, now we're probably headed back to all-time highs. All right, let's look at silver. Silver kind of consolidating in a potential bearish pattern here. Monitor this pattern. This is a very classic pattern that we see often. It's what we call a bear flag. Doesn't, again, this is only the third candle, so we're just getting to that point where we can really start talking about it as a potential, immature bear flag. But let's just continue to monitor it after this big rejection off this major trend line that, again, goes all the way back to 2023 and 2022. Oil today, let's take a look there. Oil keeps going down. I'm still holding my short with Smart Money Commodity members. It is into support, so we need to see a break of $65 a barrel. And if that break does come, then I do think we head down to the $60 target. And then lastly, natural gas. It was trying to break down yesterday, but again, you could see here it hit. This is super interesting to look at. It hit and bounced small. Then it came down, closed below, no confirmation, trying to reestablish. It's really fighting to hold this level. Again, we'll have to watch and see if it can hold. If it doesn't hold, my next level to monitor would be 263 as a potential buying opportunity. All right, guys. So listen, lots to watch today. We don't have a lot of economic news. We got import-export prices this morning, but again, not market-moving information. But overall, it's all in the charts. No BS, just charts, which give us probabilities. Like I said yesterday, remember, the charts are like a foreign text, a foreign language. If we learn to understand them, we're not going to be right 100% of the time, but we can generally know what they mean, aka what the next move is coming. And that's what we're here at Verified Investing to do, is to enlighten you, to teach you, to help you really separate yourself from emotion, which is what I was ruled by for my first 5+ years of trading, which were not very good, mind you. Ultimately learning how to read the charts better and better, and putting myself in a position to make money a majority of the time in my swing trades and day trades. You guys have a great rest of your day. Thank you so much. Thanks for visiting verifiedinvesting.com. Talk to you soon.